Hello, I'm Mark Abssy, and welcome to the week ahead. So this past week, everybody's gearing up for the election. Aside from that, we did get some interesting economic numbers. We got a stronger than expected GDP print. We saw some good unemployment claims and continuing claims, both initial and continuing. The unemployment rate, today was flat, right? 4.1%. The interesting thing on the employment side, though, is that we did get payroll numbers today, and we saw that payroll numbers were much lower than what was expected, right? And we've kind of seen this in other releases recently where it does seem like, and I guess this number reinforces the idea that companies, it's not so much that they are laying off people, they are just not hiring or they are delaying hiring. So that is something that is happening and something we're paying attention to. I think kind of coinciding with that a little, we got an ISM manufacturing number that was not only lower, but lower than consensus, but also just lower overall. And so that is definitely something that continues to trend. Of course, it's not a good sign when these numbers continue to retreat lower from 50. Of course, 50 is that magic dividing line between growth and contraction. So we do see manufacturing sector, continue to slip lower and continue to have some more contraction. Now, this of course showed up in markets, right? And when we look at broad indexes, and we've talked about this before, where is tech your friend or not? And honestly, this past week we did see some tech earnings, and it turns out that tech wasn't leading the pack this week. In fact, in terms of sectors, it was the third lowest sector on the week, down about 280 basis points or 2.8%. Broad indexes ranged from the Dow being flat-ish, up 15 basis points, to the Nasdaq Composite down 1.5%. S&P down about 1.4%, and then the Russell 2000s, small caps down about 0.5%. Looking at some other asset classes here, Bitcoin up 4%, but it's interesting because it kind of did a bit of a round trip, right? It started the week below 70, actually started the week around 66, hit as high as 72,000 or above 72,000, and then the last day or so came back down below 70. So definitely, there is some resistance there at 70. I think like a lot of things that are going on, Tuesday's going to clear up a lot in terms of what the markets are doing. Okay, Ether similarly had a bit of a pop, came down. Both coins are up roughly 4.3, 4.4%. Gold essentially flat on the week. The 10-year, that yield continues to rise, right? So it started the week 2.4, started the week at 4.24, and ended the week around 4.38. So, yields are indicating that people are looking for deals. With the markets doing what they are, it looks like maybe some of those deals are cash still. Looking at oil continues to trade lower, which on the one hand is good for consumers, maybe not so good for energy sector investors. So we have West Texas at 69 and Brent at 73. Again, both lower by about 3.8% on the week. I think that's about it for this week, right? We're kind of set up for Tuesday's election. I wouldn't say that markets are kind of holding firm or anything. They're definitely reacting to what is happening in the economy. And so, a lot of what the market is going to be doing or reacting to has to do with what's going to happen on Tuesday. Now, whether or not we get final results on Tuesday is another matter, but at least the market's going to take its cues. Now, one group or one area, frankly, which technically should be indifferent to what happens on Tuesday, of course, is the Fed. And when we look at what's priced into the curve, it's like 98. Yeah, it's like 98% probability of a simple 25% cut. All right, so that's been kind of baked in the last couple of weeks. I don't think whatever happens on Tuesday that's going to change anything. Okay, so we're essentially looking at a baked-in 25 bips that's going to be announced on the Thursday. And again, looking at next week in terms of other economic data, honestly, a lot of it is going to come down to earnings, and there are a lot of earnings. Let me see. Next week, I will just pull this up quickly here. Not a lot going on. We're going to get some more. We're going to get services PMI. That's expected to be flat again, over 50, around 55.3. Again, more services. Of course, that PMI composite will come out, the purchasing managers. And then Thursday, we're going to get the regular claims data. And then Friday, the only thing that's coming out is Michigan sentiment, and that's expected just to tick slightly lower to 70 from 70.5. Okay. Talked a little bit about earnings. When we're looking at what's happening next week, this past week was a lot of tech, certainly some tech-heavy names. Next week's going to be more of a broader spectrum. Some big names and some good data points that we're going to pick up here on what's happening in the economy. Earlier in the week, we're going to get Brookfield, right, which will give us insight into not only commercial real estate, but also what retailers are doing. AIG, another name, Palantir, right? They were added to the S&P 500 a little while ago. They did get their kind of SPX bump on that, but they are a company that, whether people realize it or not, I mean, they are going to be an important part of the economy, believe it or not, in the coming years, especially with the technology and, of course, all the data that they have access to. Near and dear to our luxury buying boom model, of course, is Ferrari, and they're going to be reporting. It's interesting on the luxury goods side, as we've talked about before, a lot of luxury good buying is, takes their cues from China and what's happening in China. It's not clear that Ferrari follows that model as closely as, say, LVMH or other kind of consumer good products are, right? Little different if you want to spend $7,000 or $8,000 on a handbag versus $130,000, $180,000 on a car. On the other side of that, for the following day, we're going to see Toyota come out, and that's, of course, going to give us a lot more insight into the consumer and what they are buying there. CVS, another consumer name, Lyft as well. Tying into our nuclear energy and uranium, Cameco is going to be reporting. Of course, they are known for, and people look to them in terms of uranium production. So it'll be interesting to see, to get their notes on what's been happening in that sector and what they see going forward. Airbnb, of course, going to talk about that, and we will get clearly other updates on potentially where people are going and what they are spending their money on in terms of housing, lodging. Cloudflare and Fortinet are also going to be reporting, and it's going to be interesting to see if Cloudflare has kind of worked off their Microsoft update snafu from earlier in the year. Rivian also going to be reporting. It's an interesting company. They do make a good product. It has good build quality. They have these contracts, with Amazon and other companies to mass produce fleet vehicles. For some reason, on the consumer vehicle side, they just haven't been able to get all the kind of cylinders clicking, probably because their cars don't have cylinders, but that's a whole other thing. They did announce earlier in the year that they're doing some tie-in with a Volkswagen, and there were 2 or 3 smaller SUVs that they were going to debut. Haven't really heard a lot about those lately. One name that is going to be reporting this week, and it ties in with, frankly, a lot of our models and, frankly, a lot of the market too, is Qualcomm. Okay, now recently ARM suspended their licensing deals with Qualcomm over a spat. And the spat, I'm going to do this very quickly. The spat is that Qualcomm acquired a company in 2021, a chip development company, and ARM is maintaining that the company that Qualcomm acquired, right, which is Navia, a lot of their technology was produced using ARM IP. And ARM is maintaining that when Qualcomm purchased this company, they didn't ultimately purchase all the rights to use all that IP. So that is something that is going on. They did announce that they're going to pull the licensing deal for Qualcomm. This is a case that's going to courts, I believe, in December. But it does have potentially dire implications, not just for Qualcomm, but for a lot of technology, specifically with AI development. I mean, Qualcomm and their Snapdragon chips are in virtually every phone out there. They are a huge player in the space for hardware that is driving kind of the AI boom. So, not trying to pull any Chicken Little nonsense here, but it is something to definitely pay attention to and kind of be aware of. All right. I'm just trying to think. There's the election on Tuesday. Go out and vote if you haven't. We've got the Fed on Wednesday, Thursday. We've got a bunch of earnings that I just talked about. And, we'll have to see what happens. All right. So thanks for joining, and we'll see you next time. Bye-bye.